I mean, it might be a quick game,
Okay.
but we'll see.
Because you're good at this?
I'm competitive. I like to play games, so.
Yeah. Hey, why don't we hold some of these? Okay. Did you already start recording? Okay. So, Stephen, while I kick your butt in Connect 4, what do you think about Fannie Mae and Freddie Mac eliminating the minimum credit score?
I think it's stirring up a lot of conversations, that's for
Yeah.
sure. Good and bad.
Yes.
And overall, I think it's a really good thing.
Why so?
Anytime that you can give access to homeownership to more people, in my opinion, I think like that's what the job is about,
Yeah.
is getting people into a house and not having little things be a barrier, like credit score.
Yeah.
And I think that's what's stirring up a lot of good conversations, is people with really good credit hear that news and they might not like that news so much, where people with lower credit scores, they hear that news and they get a little more excited.
For sure. For sure. So, why do you think people that have great credit scores might be opposed to this news?
The feedback I've had, the conversations I've had, and this is with clients and realtors, they hear that news and they say, well, I've worked super hard to build my credit. I've done all the right things. I have worked so hard to get this credit score because it's so important. And so there's a sense of pride there.
Yeah.
Where now their initial gut reaction for some people is, I did all that work now for nothing. And it's really not true. All the hard work they've done still matters, very much so.
What are the places where having a better score still matters?
So having a good credit score. Oh, you got me. Yes. I was not paying attention. Having a good credit score, this is going to make so much noise.
Well, we can wait if you want.
Having a good credit score still factors in to things like interest rates. The automated approval system still looks at that as a factor. But the biggest difference that the credit score is going to make now, it's not going to be a pass-fail on you can get a house, you can't. It's going to read the history more, and it's going to drive interest rates. And the big one, PMI.
Yeah.
The cost of PMI is still heavily weighted in that credit score. The lower it goes, you're going to be paying a ton of PMI if you're not doing like 20% down, or if it's not a loan that doesn't have PMI.
So how about for the people who don't know, what is PMI?
Well, first off, we need to get on this rematch.
Oh, yeah. Okay.
What was the question?
What is PMI?
Oh, PMI. You want to go first? Winner first?
You go first.
Loser first. PMI is private mortgage insurance.
Private mortgage insurance.
And what a lot of people associate that with is if you buy a home without 20% down, you pay an extra insurance that protects the lender in case you default.
Yeah.
And it's an insurance policy that the mortgage company holding a loan, if that person stops paying, they can cash that in. It helps pay the balance of the loan down so the lender can turn around and sell the home off without as great of a chance of them losing money.
So it's a monthly payment, an extra monthly payment if you're not putting 20% down on your house.
Yes. So people that have reached out with this news and their credit score is below like the normal standards, we're able to get them approved now, where they might have just gotten a hard stop. Hey, if your score is too low, you just can't get a mortgage now. And they're able to get approved, but things like the cost of PMI might be more expensive. They might get a better interest rate. So credit score is still extremely important when you're pricing out a loan.
Yeah. So it's more possible for people with a lower score to get a loan, but people that have a great score, it's still very much to their benefit that they work to get that score.
Yeah. And an example of someone who would have a low credit score that would fit this a little bit better is, I think of the example of clients from the past where maybe they co-signed on a car and for like a kid, and the kid misses a payment on the car. Well, the parent might have, I'm watching, the parent might have 20, 30, 40 years of excellent credit history, and then the co-signed debt, their kid, whatever, makes a mistake and misses a payment on their car.
Yeah.
So a month later, I pull their credit to pre-approve them. They think, oh, there's no problem. I'm getting approved all day long. And then I pull and it's like a 500 credit score.
So that's great. So it going more off credit history helps a lot of people.
Yep. So someone that maybe accidentally had a recent mishap. Boom.
Oh, no, you didn't.
They had a recent mishap. They aren't going to be withheld from buying a house.
Yeah.
Their history is still going to matter. And what we see is when we're approving a loan, we run it through an electronic system. And instead of it just having a hard stop now at like 620 or whatever that score would be, it's going to allow access even below that, but it's going to read the entire history. And to me, that means that the industry is getting smarter. They're learning how to analyze risk better. And like I said, that's going to give access to more people to homeownership, which to me, that's extremely important.
Yeah.
I think everyone should have access to things like homeownership.
Absolutely.
So while we play this tiebreaker round,
Okay.
what do you think about it?
I think, like you said, it's very helpful for people who just had one recent bad thing happen, but the last, 5 years they've been doing great. It's huge. I think it's huge for those situations. It's huge for people who need to own a home but don't have great credit. I mean, I think it's great for a lot of people.
Yeah.
Definitely.
I ran into a situation where this very same thing happened to me. And it was several years ago, and interest rates had dropped, and we wanted to refinance our house.
Yeah.
And I went in with all the confidence in the world. I'm very proud of my credit score, and my dad always instilled that in me. And the loan officer, because I can't do my own loan, pulled my credit, and he was like, oh, like, this is going to be bad. Rates aren't going to be good. And I thought he was joking at first. He was not joking. We had opened up a retail credit card to get a discount at like Old Navy, and somehow forgot to make the payment on it.
Oh my gosh.
So there was like a $25 balance for a shirt, and my credit dropped into the low 600s. And previously it was like high 700s, low 800s. And I wasn't able to refinance at the best possible time because of that. We had to dispute it. We had all of this stuff happen. And eventually they took it off my credit, and we were able to refinance and get good terms. But that happens. And I can imagine there's people that walk in with that confidence to buy a home.
Yeah.
And they go look at houses. They do all of the things assuming they're going to get an approval. And then something like that pops up. And that could keep them from buying a house.
Yeah.
It's not fun. Let me tell you from my personal experience, that was like a gut punch when they told me my credit score and told me that I didn't have access to getting a refinance anymore. And as a mortgage banker, like that really hurt.
I'm watching if you have secret moves. So it's not a bad thing. It's a good thing. Don't tell me that you just won. Okay, no, you didn't.
No,
Okay.
we're getting close
You
though,
scared me. You got excited.
because I blocked you.
Oh, man. Come on.
Switch a root on you.
At this point, I'm just trying to block you from winning.
I'm doing the same. One of us is just going to luckily win.
Nope.
Some of the bad feedback I got too was like people automatically assume low credit score means like bad person. Like people with low credit should not
You'd.
be able to buy a house. And
That sucks.
like I think everyone could have a little bit of grace and understand that like sometimes mistakes happen.
Yeah, for sure.
It's not a free for all.
Yeah.
And it's still going to be hard for people with extremely high risk to buy a home, just like it was before. But it's going to be more forgiving for people when they have a low credit score. And default, like missing a payment isn't the only reason that can keep your credit score low. Sometimes it's, and I'll use like the example of a self-employed borrower that heavily relies on credit cards that they took out to operate their business. So they have high credit card balances, then they get a paycheck, they pay it down, then they max it back out, and that inconsistent credit history like that, or they might be opening up a lot of debt recently to support their business. Doing stuff like that can actually bring that credit score down.
Yeah.
And they might have never missed a payment on anything. They could have decades of history that is in their favor, but because the way that the credit score model works, they have a low credit score. They're looked at as a high risk. And those people are great candidates for buying a home. If it's, hey, you've been missing payments on absolutely everything, especially very recently, whether it's a mortgage, credit card, car loans, anything, and that's how your entire past history looks, it's still going to be really hard to buy a house.
For sure. But it does open up some situations where the door was closed before. So
Yeah.
Good.
Yeah. So
good stuff.
I'm a big fan of it.
Yeah. Good. I think we're done.
I think we're done.
I think we